Hello traders, this is Ala Peters, 1:52 EST on January 31st, 8 minutes before FOMC release, the most important financial news in US that impacts S&P highly. So, this is your key day trading charts that have been present in the trading room since early this week. This is a reversal zones that were in a play previous week if you browse YouTube channel, as these were key trend inception levels in the trading room at that time. This was key trend inception levels in the trading room yesterday morning, where S&P pushed a little bit lower. This is where you never ever short the markets ever near this level. However, this morning we witnessed very clearly this Fibonacci resistance identified dense in advance, confirming buyers are weak. At the time of FOMC release, I will convert this chart to 1-minute chart, and I will continue reminding you. This is a chart that shows you very clearly to the tick. Respect Fibonacci resistance and never ever short near reversal zone. What would we like to see? Powerful bullish trend reversal. As a day trader, this is what you are interested in. As a position trader, you understand extremely well. Bullish rally exhausted. This is key reversal zone on institutional rally. Everyone is seeing this? This is a chart that's been present in the room for years. Let's walk down memory lane. Let's take a look on larger time frames and what reversal zone means. This is monthly chart. This is 2016, 1800 number. This is what played out later on in 2016. Buyers stepped in on weekly chart from 1800 number and respected key Fibonacci resistance, bright pink level. Everyone is seeing this? Taking S&P over 7 months to break through this level. Where is S&P right now? At the end of the rally. Market in bearish correction. This is institutional chart. This is one of the most important weeks in years on S&P. You as an investor will forever benefit from method. You as an investor know extremely well what you are paying attention to. Yearly charts giving us drastically higher levels. But when weekly giving you this is a week when you will be tested to the core of knowledge of pure price and Fibonacci. This is when we will dissect to the tick long-term charts in Friday Fibonacci class. So, we are at key reversal levels identified years in advance in the room. Trend inception identified in early 2016. No surprise. The end of the minor trend taking over 7 months to break through. And here we are. So, if you understand the accuracy of the method at that time, at trend inception levels, 1800 number, never ever forget how important this area is. So, this is another reminder. This is a yearly chart from 2016. Everyone is seeing this chart? In 2016, price had shown very clearly the importance of 1800 number and bullish rally moving higher up with key levels as an obstacles to the upside. Every single chart connected very clearly. Every single move starts from very small day trading charts, which is exactly what we will be paying attention to at the time of FOMC release. So, this is trend inception levels, as you saw on weekly institutional chart. This is exact same meaning on this chart. Do not ignore this area. Here's a couple of examples from reversal zone from months of December and months of November. Do you remember this? Trend inception levels, day trading chart, 60-minute chart. Identical strategy as on weekly, as on monthly, as on yearly. Do you remember this chart? Trend inception, early November. Identical to weekly trend inception investment chart. So no matter what the news announcement is, no matter what the most important news in US is, this is a place you never ever ever short into. We will see very sharp moves on S&P instant. So please do not ignore this area as weekly chart at key reversal levels. Buyers this entire morning had been extremely weak. Is this morning first time ever price will crash and burn through this area because we are at institutional reversal zone? As we've been dealing with very weak buyers this entire morning, in case you forgot. Remember this? Bullish correction only. So, pay attention to Fibonacci reversal zone and remember, buyers been weak this entire morning. FOMC held the target as expected. Incredibly bullish news. Let's move the chart to 1 minute and let's see if price will break through 2840 next. Last chance on S&P. This is key level to the upside. If rules are met, you will see the trades. If you do not hear me speak, we are in discussion with students. First few minutes we are ignoring all the formations that played out on S&P. If you know how to place bracket order, if you understand the difference between stop limit versus limit order, you are on standby. Extremely bullish news with Fibonacci reversal zone in a play. Very important place for day trader to be. Everyone clear? Allow S&P to settle down and remember, never pull a market order, ever. So picture perfect conflict we discussed earlier. We're at key day trading support and we are at key institutional resistance. Entire morning we dealt with very weak buyers. You witnessed Fibonacci reversal zone respected. However, as we discussed with students, this is bullish fluff. This remains meaningless. How did I know this is massive fake out? I warned you. Pulling a random trigger, never an option. Being a knowledgeable trader who knows how to place stop limit bracket order is. Institutional reversal levels, day trading support. Allow market to settle down. This is drastically more powerful than this. Trade with institutions and never against them. Bullish news? Weak buyers since early this morning. Clear on that? No surprise whatsoever. None. Only if rules are met, you can take a trade. This is one of the most dangerous reminders ever. Random speculative market orders, never an option. So, we're at reversal zone, we are monitoring for reversal. Only if institutions will step in with power, you will see a trade. This is a test of your knowledge. This is a test of knowing how to place a trade. Trader who pulled a random market order, trader who speculated. What is the best case scenario? Sweaty palms that make your broker very, very happy? This random dance can remain. Buyers remain extremely weak, shorting into Fibonacci reversal zone, never an option. You want to short into Fibonacci reversal zone? You love, love, love driving at 150 miles an hour into brick wall. Good luck on that one, as I continue warning you. This been respected since last week in January. Not the place you ever want to short into. This morning we're dealing with very conflicting weak buyers, as confirmed. This is a resistance that's showing buyers are weak. But endless bullish corrections for the previous 7 hours, reminding you shorts are not an option. And that's quite a pickle we are dealing with. Look at that. Ouch. Will be so marvelous to see meaningful bullish push. As you are witnessing, we've been here 12 minutes after FOMC release. This is massive bullish fake out. This is massive bullish weakness. Market sitting at Fibonacci reversal zone. We're only interested in strong buyers. We're discussing with students why price is taking such a massive pause. Absolutely no surprise. Most important rule you learn in the course in a play. Students know what identifies brick wall we're dealing with this morning. Students know what is causing so much pain on S&P. Buyers remain extremely weak. Institutional reversal zone as resistance is not letting this price rocket. Everyone clear on that? Institutional reversal zone. Day trading support where price been for weeks. Separating weak buyers from powerful bullish push will make a world of difference. We're not seeing any reason to touch any longs. Success rate on your shorts less than 15%. Quite disappointing, traders. But as we discussed since early this morning, market structure completely different. No meaningful buyers yet. Every single short this morning did not work. Every single short into brick wall, as reminded from weeks prior. So, if you know where reversal zone is, you understand that your success rate less than 15%. Shorts not an option, unless you're interested only in one trade, not lifetime of success. And just to remind you, as we discussed in previous videos, this is Fibonacci reversal zone and this is very bearish news release on oil. As we discussed prior, as again recorded in separate video, no matter what the news was, this is Fibonacci reversal zone. This is a place you never short near. As once again, Fibonacci overrode bearish news on oil. What will be a problem? This level, traders. And that's the accuracy of the method. What you will choose to trade, absolutely up to you. Knowing rules for your entry, knowing where you stop, knowing where your targets are is the key. No matter if you trade 1 minute, no matter if you trade tick charts, no matter if you trade daily, weekly, monthly, no matter if you trade pound, euro, ETF, stocks or options, choice is yours. All details in live Fibonacci Mastery Course. This is what's causing the problem right now. We're at reversal zone with extremely weak buyers, as I continue warning you. Non-stop G3 pullbacks, non-stop pullbacks from day trading reversal zone that conflicts first time in years with reversal zone on institutional chart. One of the most important weeks in the market in years. Non-stop bullish corrections, non-stop bullish buyers, non-stop weakness remains. And that's what played out this morning on S&P.